Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of January 13th to January 17th, 2025. Let's dive into what to expect in the upcoming week. This week begins with a wave of optimism as the U.S. labor market defies expectations, with December's jobs report significantly surpassing forecasts. The addition of 256,000 jobs and a surprise drop in the unemployment rate fuel hopes of a robust economic start to 2025. Meanwhile, in Canada, despite political uncertainty surrounding leadership changes, the domestic job market posted impressive gains, signaling resilience amid broader economic caution. As Treasury yields surge in response to these positive employment figures, attention now shifts to whether this momentum will influence central bank policy decisions in both countries. The U.S. labor market began the year on a strong note, with December's non-farm payrolls adding 256,000 jobs, far surpassing the anticipated 165,000. Revisions to the previous 2 months reduced job growth by 8,000. Meanwhile, the unemployment rate unexpectedly fell to 4.1% from 4.2%, defying forecasts of remaining steady or ticking up to 4.3%. Wage growth rose by 0.3% month-on-month, although annual wage growth moderated slightly to 3.9% from 4%. The robust jobs data has eased fears of an economic slowdown and reduced market expectations of further aggressive Federal Reserve rate cuts in the near term. As Canada braces for Donald Trump's inauguration on January 20th and grapples with Prime Minister Trudeau's resignation, the domestic labor market delivered a strong end to 2024. December saw an employment surge of over 90,000. The largest gain since January 2023, while the unemployment rate dipped by 0.1 percentage point, defying consensus expectations of an increase. Hours worked also posted their strongest rise since July 2023, signaling solid economic activity despite overall caution surrounding Canada's economic outlook. The Bank of Canada, BOC, will closely watch these developments ahead of its late January policy decision. While Canadian bond yields climbed 10 basis points last week, the loonie remained stable after a 7% decline since September. This robust jobs data reinforces the view that the labor market remains resilient, even as broader economic sentiment appears to falter. U.S. Treasury yields surged as December's payrolls report exceeded forecasts, adding 256,000 jobs, nearly 100,000 above expectations. The unemployment rate dipped to 4.1%, reaffirming robust economic momentum despite elevated interest rates. This stability in the labor market has persisted since June 2024, with unemployment holding near 4.2%, challenging concerns of a slowdown and casting doubt on the need for further rate cuts in 2025. Policymakers are likely to see this data as confirmation of an economy resilient to higher borrowing costs. With job growth strong and unemployment steady after its rise from 3.4% in April 2023, the U.S. economy continues to outpace projections, keeping the debate over monetary easing firmly in focus. This week's developments have underscored the resilience of the U.S. and Canadian labor markets, offering a reassuring outlook as 2025 unfolds. With strong job growth in both nations and declining unemployment rates, the focus now turns to how central banks will respond to these positive economic signals. As markets digest the implications of robust employment data, the global economic landscape remains dynamic, and policymakers will be keenly attuned to these trends as they navigate the year ahead. Stay with us for continued analysis of these critical economic shifts. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.